Good morning. So we'll continue with our revision class. Today we'll cover time of supply, place of supply, and value of supply. Okay. So what is time of supply? Time of supply is very important because once you have identified if a transaction is a supply, then it is coming under the purview of GST. So when the GST has to be collected, which state's GST has to be collected and remitted? So this has to be decided based on time of supply, place of supply. And then value. What is the value? The transaction value on which GST has to be collected. So first one, time of supply. Time of supply, place of supply, everything can be divided into two. One is for goods and one is for services. Okay. So time of supply with respect to goods, it is earlier of the two. So the goods will always have movement. In case of services, we can say that there'll be no movement of actual physical movement. But in case of goods, there is an actual movement of goods. So when there is a supply involving movement of goods, time of supply will be the earlier of the following. What is that? Date of issue of invoice or the date of removal of goods for supply. Okay, so the date of issue of invoice or the date of removal of goods. If the supply does not involve movement of goods, then it will be the date of issue of invoice or the date of delivery of goods or making available the goods to the recipient. Okay, so this is very important to know what is time of supply with respect to goods. When the goods are sent on a continuous basis. There is a continuous supply of goods. Like in case of construction, there will be a continuous supply of material. There will be a continuous supply of goods. So in that case, at every interval of time, as per the contract, they will have to raise a invoice or a statement of what is the material supplied. Okay, so the date of issue of invoice shall be considered as the time of supply or the date on which the payment is received. If no such invoice is being issued, the date on which the payment is received. That will be considered as the time of supply. Then, goods sent and taken on approval basis. So, in certain cases, we will not be purchasing the goods directly. So for certain customized goods, it is important that first the goods will be evaluated to see if it satisfies the requirements of that recipient, and then the recipient will say, okay, it is satisfying my requirements, it is as per the conditions prescribed, so I will buy the goods. But if there are 10 such items being sent, maybe 2 or 3 items which does not satisfy the requirements of the recipient, he will return it back. So once this is done, then the supplier will issue an invoice. So when the supplier issues an invoice, he will issue an invoice for 8 items which has been accepted by the recipient. And for the 2 items, it is returned back. No invoice will be generated. So that is not a supply because there has not been a sale. There has not been a completion of movement of goods, a consideration coming in, nothing. So for the 2 products, it is just coming back. It is just return of the 2 products. So when goods are sent on approval basis, what is the time of supply? The time of supply will be when the invoice has been issued or 6 months from the date of removal. If the recipient did not reject the goods, okay, nor he gave a confirmation to the supplier that, okay, this 8 units I am taking, you can issue an invoice. So the supplier has to wait for 6 months. If there is no reply or no return within 6 months of time, then it will be considered as completion of supply acceptance, and the time of supply will be 6 months from the date of removal. So whichever is earlier. So time of supply for goods, we can summarize that it will be date of invoice or the date of removal of goods in case there is movement. If there is no movement, it will be date of invoice or the date of delivery of goods, whichever is earlier. Now, time of supply in case of reverse charge. So for goods, there are two types. So there are two types of levy. Levy is one is forward charge, one is reverse charge. So forward charge, time of supply we have seen. Now under reverse charge, what is the time of supply? Time of supply under reverse charge is the earliest of four important factors. The date of receipt of goods, okay? The date of payment. So payment date can be divided into two. One is when the payment is entered in the books. One is when the payment is received in the bank account, whichever is earlier. So if you receive a check, you are first accounting the check in your books and then you will send it to the bank for clearance. Okay, so what will be the earlier? There will be two dates. So the date of payment in the books or the date of payment when it is debited from the bank account of the recipient, whichever is earlier. So you can just remember date of payment. Date of receipt of goods, date of payment towards the goods that has been received, or 31 days from the issuance of invoice by the supplier. Issuance of invoice or any other document from the side, supplier side, 31 days from the invoice date. Earliest of these three dates will be considered as time of supply in case of goods. Okay, so invoice 31 days from the invoice date, date of payment, or the date of receipt of goods. In case of vouchers, if the voucher is identifiable, then the date of issuance of invoice. If the vouchers are not identifiable, if you cannot identify which product this voucher is associated to, like it just mentions 500 off in the next visit. That means you can take an end range of services, you can buy end range of products from that particular shop, and you can avail a 500 rupees a voucher, or you can encash this 500 rupee voucher. So at the time when the voucher was issued to you, we don't know which supply you are going to avail in the next visit. So in that case, it will be the date of redemption of voucher, because at the time of redemption, we will exactly know what service you have availed, which product you have brought, against which this voucher is being used. So that GST rate will be applicable. So if the supply is identifiable, the date of issue of voucher, if the supply is not identifiable at the time of issuing the voucher, the date of redemption of voucher will be the time of supply. In case of interest, late fees, penalty, what will be the time of supply? The time of supply will be the date of receipt of that additional value. If you are charging an interest, the date on which the payment is being made towards the interest, that will be considered as the time of supply. Okay, so this is with respect to goods. Now we come to services. With respect to services, what is the time of supply? With respect to services, if the service is completed and the invoice is issued within 30 days from the date of completion of the service, then date of invoice should be considered. Okay, so if the invoice is issued within the prescribed period, what is prescribed period? Under section 31, 30 days. So if the invoice is issued within 30 days of completion of service, date of issue of invoice or the date of payment, whichever is earlier. Okay, invoice or payment, whichever is earlier. In case of goods, it was invoice or the date of removal or date of delivery, whichever is earlier. In case of service, there is no movement, there is no actual delivery of goods to the recipient, and hence the second condition here is date of receipt of payment. If the invoice is not issued within 30 days from the date of completion, then it will be the date of providing the service. Okay, that 30 days benefit is gone. The date of providing the service or date of payment, whichever is earlier. Okay, in any other case, it is the date on which the recipient receives the services in the books of accounts, that the payment is received in the books of accounts. Now, time of supply in case of reverse charge. In case of reverse charge, it is the same thing as that of goods. Okay, only here the difference will be 61 days and there is no actual receipt of goods. So the receipt condition is not there. So the date of payment recorded in the recipient's books or the date of payment debited in the bank account, whichever is earlier, or 61 days from the date of issuance of invoice by the supplier, or the date of issue of invoice by the recipient. Earlier of these 4 dates will be considered as time of supply in case of services. So date of payment, it is there in both goods as well as service. Okay. 61 days from the date of issuance of invoice in case of service, and in case of goods, it is 31. Then date of issuance of invoice by the recipient in case of goods, it is receipt of goods. Only this condition is changing. Here it is the date of issuance of invoice by the recipient, or in case of goods, it is the date of receipt of goods. The earliest of these 4 dates will be the time of supply. Okay, so more than RCM, it is important to understand the time of supply in case of goods and services. So goods, 2 condition, invoice or the date of removal, date of delivery. In case of services, it is if the invoice is issued within 30 days, date of invoice or date of payment, whichever is earlier. Very simple 2 conditions to be remembered. Now, when there is a rate change, now this is very important. Why this is very important is we had a rate change on many products on this September 22nd. Okay, so because your exam is coming in December, I expect that this particular thing will be tested because it is the latest change that has happened. So what happens when there is a rate change? Now, like September 22nd, there was a rate change. Different products, they moved from 18% to 12%, 18% to 5%. So what happens when there is a rate change? Which rate, old rate or new rate, which rate you should apply? Now, where goods and services have been supplied before the change in the rate of tax. So the supply has happened before the rate change. Okay, 3 conditions. Supply, invoice, and payment. Okay, so supply has happened before, invoice is after, payment is also after the rate change. So 2 condition is coming after the rate change. So new rate will apply. Okay. Supply is before, invoice is also before, payment is after. 2 conditions are before the rate change, so old rate will apply. Supply is before, invoice is after, payment is before. Again, 2 conditions are before the rate change, so old rate will apply. And what will be the time of supply? Time of supply is invoice or payment date, whichever is earlier. Okay. So in this, it will be invoice or payment date, whichever is earlier, and both are after, so the new rate will apply. Okay. In the second case, it is invoice or payment date, whichever is earlier, which will be earlier invoice. So the invoice date, old rate. Here also invoice or payment date, whichever is earlier. So what will that be? It will be before, and the old rate and the date of receipt of payment. Okay. So ensure two conditions if it is before, old rate. If two conditions are after, it is new rate. Okay. And what will be the time of supply? Same usual principle. Date of payment or invoice date, whichever is earlier. So where goods and services are both supplied after the rate change. Okay, so the supply is after invoice and payment. After invoice is before and payment is also after. Two conditions are after, so it will be the new rate and it will be the date of payment. Supply is after, invoice is before, and payment is also before. That means two conditions are coming before the rate change, so it will be the old rate and the earliest of these two dates. Okay, so this is how you need to remember this particular condition. If you identify this logic, if you are able to understand the logic, it will be easy for you to solve the case study. Next, we come to place of supply. Place of supply in case of goods. When there is a movement of goods, place of supply is when the movement ends for delivery. When the goods are being delivered, where the goods are being delivered, that will be the place of supply. When there is no movement of goods involved, where the goods are at the time of delivery, that will be the place of supply. In case of installation, where the goods are being installed, that will be the place of supply. In case of import of goods, it will be the location of the recipient, because import is on RCM basis. So the recipient will have to pay the tax. So location of the importer, location of the recipient will be the place of supply. In case of export, the place of supply is outside India. Okay. Place of supply, why it is important? To identify which tax to pay, CGST, SGST or IGST. In case CGST, SGST, which state tax should you pay? That is based on place of supply. And one point to remember under place of supply, GST is a destination based tax. So whichever is the consuming state, that state will get the benefit. That state will get the benefit of GST, and we need to pay GST to that state, the state that consumes products, not the state that manufactures. So that is why in case of goods, we are saying when the movement is ending for delivery or where it is being delivered. In case of immovable goods, where the goods are being delivered. That in case of installation, where if a solar panel is installed, you take all the products, and if it is installed somewhere in Madhya Pradesh, and the manufacturer is in Tamil Nadu, he is going to send the required raw materials, labor, and he is going to install the solar panels in Madhya Pradesh. So which is the consuming state? It is Madhya Pradesh. So where it is being installed? Madhya Pradesh. So the place of supply will be Madhya Pradesh. It will be an IGST supply. Okay, so the idea is destination based tax. So where the goods are being delivered, where the goods are being supplied, that is the place of supply. Same with respect to services also. Services where the recipient is located, who is consuming the service. So place of supply is where the location of the supplier and the recipient if both the location of the supplier and recipient is in India. So what is the address of the recipient? If you have the details, if the recipient is a registered supplier and you have the details, then the recipient's location is the place of supply. Okay, so where goods are assembled at site, the location of the assembly, where there are certain exceptions, there are certain services and goods for which there are exceptions from the general rule. That is, in case of goods which are on board a conveyance, that is, in trains, you can see there will be a supply of goods at different stations. So what is the place of supply in that case? The place of supply will be the location at which the goods are taken on board. Because when the train is it is on the rails, we will not be able to actually identify which station, which state is these products being sold. So wherever they are being boarded, it is assumed that if the products are being boarded, they will be sold within an X kilometer. So the location of supply or the place of supply will be the location at which the goods are taken on board. Okay. I have just highlighted one or two important cases like this. You can go through other exceptions also to the general rule of place of supply. In case of immovable property like restaurant service. So if you want to avail a restaurant service, you have to go to that state or where this restaurant is there. Correct? If somebody wants to have an idli from Saravanan Bhavan in Chennai, you have to visit Chennai and then go to Saravanan Bhavan restaurant and then have that idli. So the consumption happens in the same state. So we can say that the place of supply is a location where the services are actually being performed. In case of training and performance appraisal services, if it is provided to a registered person, then the address of the registered person, the location of the registered person will be considered as the place of supply. If it is provided to an unregistered person, wherever the services are being provided, that place is the place of supply. So if I have to attend a training program that is conducted in Mumbai, I need to go there and personally be there and attend the program. So the consumption happens in that state. So the place of supply is where the service is being performed. Okay, so services generally, if it is to an unregistered person, and which involves a personal provision of services, it will be the place where the services is being performed. Transportation of goods by rail or mail transport, if it is a registered person, it is always the location of that person. If it is an unregistered person, the point where the transport starts or where the goods are being handed over for further transportation. Passenger transport services, any case, if it is a registered person, it is the location of the recipient. If it is an unregistered person, the place from which he embarks the journey. So if I booked a train ticket from Chennai to Delhi, I am going to board the train from Chennai. So what will be the place of supply in that case? It will be Chennai. Services on board a conveyance, including vehicle, aircraft, train, motor vehicle, etc. It shall be the starting point of the departure. So here that you can see a very common concept. Here it is services on board a conveyance. The same thing we saw for goods also. Goods on board a conveyance. When goods are being supplied on board a conveyance, place of supply is the location from where the goods are taken on board. In case of services which are provided on board a conveyance like bedroll service in case of trains. So that is what will be the place of supply? The starting point or the scheduled first point of departure. That will be the place of supply. So passenger transportation services also we have covered. So I've covered the most important part with respect to place of supply. So place of supply, you just remember the logic. GST is a destination based tax. So logically apply the rule of who is the consuming state. And based on that, you can identify which will be the place of supply. Next, we have value of supply. So we have seen place of supply, time of supply. Now, value of supply is actually the price that is paid or payable on a product, where price is a sole consideration. Okay, so the invoice price, you can take the invoice or the MRP to be the transaction value. There are certain things that has to be added and there are certain things that has to be excluded when it comes to calculation of transaction value. Okay, you need to include taxes, all taxes other than GST. Any kind of incidental expenses, packing charges that is associated with this product. Interest, late fee, penalty, if it is included or if, in the invoice or it is due for payment. Non-government subsidies. Government subsidies will be excluded. Non-government subsidies has to be included in the transaction value. What we have to exclude? We need to exclude any type of discount if it is as per the contract it is provided before the supply has been made, or even if it is made, if a discount is provided after supply, but if it is as per the contract and it is available on the face of the invoice, you can consider the discount. The discount can be excluded to calculate the transaction value. Okay. So the actual price that is paid or payable plus tax, duty, cess, any other than excluding GST. Okay, excluding GST, taxes, any other taxes, we need to add it. Any amount that is supplied or liable in case of this is incidental expenses. Okay. Any amount that is paid by the supplier, by the recipient on behalf of the supplier, and that amount has been reduced by the supplier at the time of invoice. So that also has to be added. For example, in case it involves a kind of construction work and material was provided by the recipient. So in the final bill, what the supplier will do, the supplier will arrive at his final invoice value and then he will reduce the material that was provided by the recipient and then arrive at the net payable. Okay, so just because the material has been provided by the recipient, we cannot reduce it with the from the transaction value. So it is part of the transaction value, so we need to add it back. Okay. Interest, late fee, penalty for delayed payment of any consideration, subsidies other than government subsidies, all this needs to be added. What has to be excluded? Discounts. Discount if it is before the supply, duly recorded in the invoice. After the supply, if it is as per the terms of engagement. Okay, and at or before the time of supply, specifically linked to relevant invoices, and the ITC on this particular amount has been reversed by the recipient, then the discount can be reduced if it is post the supply. Okay, post supply. Pre-supply discounts directly you can exclude. Post-supply discount, you have to see if it is linked to this particular invoice and if the recipient has reversed the ITC. Then only you can give the exclusion towards post-supply discounts. Then when it is in case of related party or where consideration is not wholly in monetary terms, we either take the open market value or the value of like goods, like kind and quality goods. Then transaction value or value of supply for certain specific cases. Now, these specific cases are quite important. and you need to note this, because either you will be asked a question on value of supply. Now, value of supply, we have seen that there is a repeated question in like every December attempt, there is a question on value of supply. So this is also one important area that you can concentrate on, both time of supply where there is a change in the rate, because that is very relevant to the current scenario, and this particular value of supply because there is a repeated question every December attempt. So value of supply of goods received through an agent. In case of an agent, it is either the open market value or 90% of the price charged for the supply of like kind and quality. Okay. One of this can be taken as your value of supply, 90%. This is what you need to remember. It is either the open market value, 90% the value of the like kind quality. In case of lottery, it will be higher of the two. 100 by 128 into the face value of ticket, or 100 by 128 into the price that is notified by the official gazette. Either the notified price or the fair value, whichever is higher, that will be taken as the value of supply in case of lottery. Then foreign currency, in case of sale of foreign currency. Sale of foreign currency, exchange of money, exchange when the currency is exchanged to another currency and the currency is exchanged in INR. One of the currency exchanges in INR. So it can be USD to INR or INR is exchanged to USD. What will be the value of supply for this exchange service? The difference between the buying rate or selling rate and the RBI reference rate for that currency at that time into the total number of units. So, for example, we can just see this example. US dollar 100 sold by customer at 78. Okay, so 1 USD is 78 INR. RBI reference rate is 77. So what is the difference? 1 rupee. 1 into 100 will be the value of supply. Okay. Where none of the currency is in INR. So it is SGD, Singapore dollars to USD, converted to USD. So we don't have the value in INR. So what will be the value of supply? 1% of the lesser of two amounts. So we do a SGD to INR conversion and USD to INR conversion. Okay, suppose this is somewhere around 68 and this is somewhere around 78. Then 1% of the lesser of these two amounts. We take 1% of 60 to be the exchange, the value of supply for this exchange service. 1% of the lesser of two amounts by changing the money that you would have received by converting two currencies into Indian rupees as on the RBI with the RBI reference rate. So if for SGD, the RBI reference rate is 60 and for USD it is 78, then the lower of these two, 60, 1% of 60 will be the value of supply. Then the option 2 is following a slab rate. Slab rate, that is for currency exchange up to rupees 1 lakh, it is 1% of the gross amount or 250, whichever is higher. And then it is again 1000 rupees plus 0.5, then 5500 plus 0.1%. So this slab, you can note it down and it is better to memorize this slab. Okay, so there are two options. One is when the currency is exchanged to INR, when none of the currency is exchanged to INR. So if currency is exchanged, you can just take the difference and 1% of the difference can be regarded as the, difference into the number of units can be regarded as the value of supply. And in case of option 2, that is when none of the currency is exchanged in INR, it is 1% of the lowest value or slab rate. Then air travel in domestic booking, 5% of the base fare will be your value of supply. This is for travel agents involved in air travel. In case of international booking, 10% of the base fare will be the value of supply. 5 and 10. Life insurance business, again very important. Second. Yeah. So life insurance business, what will be the value of supply? So if a life insurance policy has an investment angle also, then gross premium charged from the policyholder less the amount allocated towards investment or savings, because the premium is taken towards insurance service and for investment also. Investment money is kept outside GST. So we cannot take GST on the investment amount. We need to take calculate GST only on the insurance service. So from the gross premium, reduce the investment component, you will get the premium towards insurance service, and on that premium, we will charge GST. If it is a single premium annuity policy, then 10% of the single premium. So it is a single premium. It's not going to be recurring. A single premium annuity policy, just take 10% of the premium. Okay. In all the other cases, 25% of the premium from the policy holder in the first year, 25% of premium in first year, and 12.5% in the subsequent years. This is when the investment component is not clear. If the insurance policy clearly identifies what is the investment component, what is the insurance component, you can ignore the investment component and only on the insurance component you need to calculate. But if that bifurcation is not clearly available, then you will go with this common rule, that is 25% of the premium charged in the first year and 12.5% of the premium charged in the subsequent years will be taken as value of supply. If it is an annuity policy, direct 10% of the premium. Okay, so these are some specific cases. Let me just share my notes also. So we'll just summarize the notes. Time of supply, it is date of invoice or the last day to issue of invoice. Last date of issuing invoice is the date of delivery of the goods or removal of goods. In case of RCM, it is the earlier of receipt, payment or 30 days from the date of invoice. Services, it is date of invoice or date of payment, whichever is earlier if the invoice is issued within 30 days of completion of service. In other cases, it is the date of completion of service or date of payment, whichever is earlier. In case of RCM, the invoicing date will be from 30, it will be 60. Services, place of supply, always the location of the recipient if they are registered. Else it will be the supplier's location. There are certain specific rules in case of immovable property, event, transportation, online services. It is always the location, the property's location, event location. In case of transportation of the goods, when it is being embarking the journey, that will be considered as the place of supply. In case of online services, recipient's address is mandatory and it is being insisted that even if the recipient is unregistered, when you are availing the OIDAR service, they will ask you to fill up the address, because it is very important that they need to identify whether it is an IGST or a CGST, SGST transaction. Value of supply, the special rules are very important. Forex, air travel, life insurance. In case of second-hand goods, it will be the difference between the sale and purchase price. Okay, so I've just very briefly summarized in the notes. So this you can have, it is more like a one glancer before your exam. Now we will see few case studies. So this workbook provided by our institute, it is very useful, and I would suggest you also to download this workbook and try to solve all the sums in the workbook, because it covers all uh, the sections under our syllabus. So Pink Sugar Limited, Chennai, a registered supplier, is manufacturing chocolates and biscuits. It provides the following details of taxable interstate supply made by it for the month of October. Okay. List price is 12,40,000. Item already adjusted in the price. Subsidy from government 2,40,000. Subsidy from trade association 60,000. So government subsidy, it can be reduced from the value of supply. Okay, we need not include it in the value of supply. So they are saying this item is already adjusted in the list price above. So this 12,40,000 is after adjusting 2,40,000, after adjusting 60,000. Okay, so the 2,40,000 that has been adjusted or that has been reduced is okay. It is okay to be reduced. But the 60,000 is a subsidy from, it is a non-government subsidy. Non-government subsidies we should not reduce from our price. So we need to add this back. Items not adjusted in the price. Tax levied by municipal authority. So this price does not include these items. So we need to add packing charges. We have to add late fees payable by the recipient for the delayed payment of invoice. It is yet to be received. So in case of late fees, interest, penalty, what is the time of supply? Time of supply is the date of receipt. Okay, so it is yet to be received. Because it is yet to be received, currently in the value of supply computation, we will not include this. Okay, so 12,40,000, we are adding 48, 24 and 60,000. Okay, it's very important that you read the question thoroughly before you make a decision on whether to add or not. In the same question, if they had given just this nothing in brackets, if they had just given late fee payable for by the recipient on delayed payment, nothing is mentioned, we will take it. We will assume that it has been received, and accordingly we will add it in the value of supply. But because it is specifically mentioned that it is not yet received, so they are in one question, they have tested two angles, value of supply as well as time of supply. Two concepts have been tested. Ms. Sonam, a registered supplier in Calcutta, has provided the following details in respect of her supplies made intrastate for the month of October. So the items given below have not been included in the list price. So this price 6 lakh does not include any other items. So 6 lakh is the list price. Taxes other than GST, it is an inclusion. We add it in the to arrive at the transaction value or to arrive at the value of supply. GST levied will not be considered. Okay, so we need not reduce it because this is not included in 6 lakh. So we just will not consider it at all. Packing expenses, we will consider. Subsidies received from government for encouraging entrepreneurs. What we have to do? We need to reduce this because the item given below have not been included in the price. So they have not been included, they have not been excluded. So we have to manually exclude this. Okay, so 20,000, 10,000 subsidies have been reduced, and then we arrive at the, there is a discount also. Yeah, Discount of 1% on the price of the goods separately recorded in the invoice. So it is separately recorded in invoice. It is recorded in the invoice, meaning it is a pre-supply discount. Pre-supply discount, we need not check anything. We can directly reduce that amount. So 1% of 6 lakh can be reduced as discount. We'll see this question also. In October 2024, Sunny, a registered dealer in Tamil Nadu, supplies 1,000 pieces of product A, rupees 400 per piece. Trade discount 10% is allowed. Sunny charges 17,500 as packing charges. Inspection 2,000 borne by Sahil, though Sunny is liable to pay those charges. So even if it is paid on behalf of the supplier, it has to be added in to calculate the value of supply. Interest 3,000 is charged for delayed payment and it is paid by Sahil within October itself. So we can take that also in calculating the value of supply. So list price, packing charges, inspection, then delayed payment because it has been received. So time of supply concept is also covered. Trade discount is always on the list price. So we should not calculate discount on the total value. It is on the list price. Okay, we'll see a question on time of supply. Vikash Consultancy provides the following details. Date of supply of services, date of issue of invoice, date of entering the payment in the books of the supplier, date of credit of payment in the bank account. Determine the time of supply in both the cases. That is in case 1 and in case B. So case 1, you can see the supply of service is on 19/8/2024. Invoice is issued within 30 days. Okay, date of entering the payment in the books is 6/9. The date of credit is 5/9. Earlier of these two is 5/9. So payment date is 5/9 and the invoice date is 29/8. So what will be the time of supply? The earlier of these two, 29/8. In the second case, the supply of service was on 16/7/2024. The date of issuance of invoice 28/8. So it was not issued within 30 days. If it is not issued within 30 days, the date of completion of service will be the first date. And what is the second date? Second date is the date of entering the payment in the books or the actual receipt, whichever is earlier. So here, the earliest of two payment dates, it is 29/8/24. So what will be the time of supply? The time of supply will be the earliest of 2 days, 16/7/24. So understanding the provision is very important. If you understand and you know the logic behind the provisions of time of supply, place of supply, and value of supply, you will be able to attend all the case studies. Okay, with very, very much of a ease. So with this, we'll close. We'll continue with ITC in the next class. If you have any questions, we can take up the questions as well. Anyone?
No, ma'am.
No. Okay. Okay. So I hope you are going with the classes. Okay. So if we have completed till this 5.3, module 5.3, I would want you to also just move in the same speed and complete up till that. Ensure you do all the illustration in the books and in this workbook. Okay. Thank you. So we'll meet in tomorrow, same time.
Okay. Thank you, ma'am.